January 22nd, 2024. Coming into today, I had a couple of thoughts. After seeing this gap up and looking at, the daily chart, we're pretty overbought in general. So I thought the day was going to be a trading range day, and I thought it would be relatively disappointing for the bulls. And it was. You can see we ended up essentially getting a bear doji bar. Or it's a small bear reversal bar. I also thought that the bears who shorted above this high were going to end up making money. So I thought we were going to end up testing, what would be yesterday's high, this price level, at some point during the day. Now, it's easy to get too convinced, and then you're holding short through all of this, and it's creating a lot of problems for you. You don't have to test immediately. You don't really know the path that we're going to take to get there, but I thought it was likely that we were going to get to this high. Additionally, you can see we ended up getting a measured move down of the wedge, which leads to basically exactly the low of the day and around yesterday's high. So there was a lot of magnets down here and a lot of reasons for us to bounce on 48.49 like we did. Strong bull bar on bar one, but I suspect the follow through is going to be disappointing. We're overall pretty overbought, so the odds of a big bull trend today aren't very likely. So I thought more likely that we were going to go sideways rather than up. And you get bad follow through on two, which is relatively expected for the bulls. When you get the bad follow through on two, it tells you that traders are going to be more interested in buying pullbacks, like 50% pullbacks, things like that, rather than buying directly above bars. So you can see traders, bought more, and they got out of their first entry around break even on bar four with a profit on their second entry. Bar four is a high one buy, but it's not very good. You're buying pretty high in what's probably going to end up being a trading range. So you might get some follow through if you're lucky, but it's probably not going to be all that good. And five is, a deceptively bad bar. Bar one is a big, strong bull bar, and it's a 10-point bar. And then you get five, which is about half that size. So if this is, setting the tone for the day, is this a really strong bar? Not really. It's kind of weak. It's a good bar for the bulls, and it's technically a buy the close bar, but you wanted a better close if you were a bull. And again, it makes traders more interested in buying 50% pullback. You can see they bought the pullback here. So when you see this, you got to be thinking rather than buying up here, traders are probably going to be more interested in buying a pullback. And you can see they bought the pullback during six, and then look at this tail on seven. It traded up to basically exactly the high of five, where traders bought more lower, and they're selling out. And that's what causes the big sell-off on seven. Can you sell seven? Well, I do think we're going here, so it's probably okay to sell seven, but you can't exit below eight if you sell seven. If you're selling seven, you're selling in the middle of a trading range, and this channel was reasonably tight, so it's probably going to get some sort of second leg. It might not be all that big, but it's probably going to get some sort of second leg. So I think if you sell seven, you kind of have to just sit through eight. At this point, after you see eight, if you get out, you're saving yourself 2 or 3 points, and you've already lost like seven. So I don't really see any reason to get out above eight if you're selling below seven. Eight, also one, pullback two, pullback three, so forming some sort of wedge. Bad follow through on nine. If you're buying above eight and you get nine, that's kind of what you're expecting, and those traders scalped out, causing 10. 10 is a truncated wedge or a head and shoulders top. It's the same pattern. You could sell 10. It's, bears, they sell seven. They see a breakout pullback. They sell 10. It's a reasonable swing short. And bad follow through on 11, kind of as expected, but you can't really buy above 11. Do you stay short? You probably can. It's just this whole thing in general is not, this is a trading range open, so you're expecting lots of disappointment. Traders who sell seven, disappointed eight. Traders who buy eight, disappointed 9, 10. Traders who sell 10, disappointed 11. So you're going to be getting a lot of disappointment, and you have to keep that in mind. 12 outside down for the bears, good for the bears, and then a big follow-through bar on 13 closing around its midpoint. I think it closing around its midpoint at the moving average is a good reminder for the bears that we're probably in a trading range. And with how strong these bull closes were, not the biggest bull close on 5, but still a strong close, a big bull close on 8, a big bull close on 1. With how strong and big these bull closes are, the downside on the day is probably going to be limited to like maybe a measured move, like I showed earlier. So you can't be expecting a big bear trend, especially when you're getting, big bull bars early in the day, and the bear moves. There's big tails on 12. There's a big tail on 13. So you can't really be expecting too much from the bears here. Bad follow through on 14. Do you exit above 14 if you're a bear? I think you probably have to. It's a couple pushes down. You could argue it was 1, 2, 3. This was the third push up, and then 1, 2, and then maybe 3. But overall, this could be a second leg trap. So not all that good. I think a lot of bears are going to exit above 14, but it doesn't trigger because bears sold the close of 14 during 15, trying not to let it trigger, hoping to get out lower. And you can see 15 close near its low. We have an inside pattern, 14, 15. Bears can take the sell below 15, looking for a swing down. Some bears take the short, and you can see they're pretty quick to scalp out. They get 5 points, they get out, and that's what's causing the bounce on 17. Now, why are they exiting? Well, you're at the bottom of a bear channel. So you're trying to, you're getting to the bottom of a bear channel on 16. So the downside is probably limited regardless. And this is a trading range day. Look what's happened on all of the good bear bars. Starts as a good bear bar, gets bought up, and then a bull bar. Good bear bar, bull bar. Good bear bar, bull bar. Good bear bar, bull bar. So pretty much all the good bear bars are followed by bull bars. So you have to be expecting the same thing on 16. And so that's why a lot of traders scalping out low during 16, causing 17. 17, you can probably exit above 17 if you're short, but you notice bears again sell to close and don't let it trigger, causing 18. And good follow through for the bears on 19. I think bears who took the sell below 10, able to make 15 points. So they're able to make a swing profit, which is the goal. And they'll exit, causing obviously the big tail on 19. And then, on 19. And traders realize that this is a couple pushes down. It's subtle, but if you look, 19 breaks through the channel line, right? So 19 tests through the bottom of the channel line, and it's a failed breakout at the bottom of the channel on 19. Additionally, we still have this open gap here, so we're probably getting to yesterday's high, but that doesn't mean we can't bounce for a couple legs first like we did and get there later in the day. I used to get too fixated on magnets, and so I would just hold short and keep selling and just hoping that I'd get back down here. And sometimes it does, but sometimes, it just goes a lot more sideways and you end up trapping yourself in and out of a bunch of trades and losing money, and then only to watch it end up going exactly where you thought it was going to go. So traders taking profits, causing the bounce on 20. Follow through for the bulls on 21, but this channel down is pretty tight. I expect the reversal up to probably be mostly minor. We could get two legs sideways to up, but I think the high of 14, which was, the close of 14, technically a reasonable buy. So I think that this is probably the high of the trading range if we get there. Bad follow through on 22, 23, 24. Just look at how disappointing this is. If you bought 2021, you buy above 21, 3 bars later, you've made, a point. Is that really a trade that you really want to stay in and hold on to? Not really. It's probably this is probably a minor reversal at best. And so at this point, you gotta kind of start wondering what you're hoping to accomplish by holding long. Probably not much. And so when you get a reversal down 24, 25, 25, 26, 26, double top 24, maybe a reasonable swing, but there's probably buyers here. And with how strong this was, it's due for a second leg. So really not a great sell below 26, but bulls can exit, and bulls do exit, but that causes 27. But 27, near 50% pullback, bulls are going to buy the 50% pullback. And that there wasn't necessarily bears selling below 26. It was probably mostly bulls exiting. So most likely probably buyers down here are not too far below. That's what happens on 28. 28, you could argue trend line break, higher low, major trend reversal. But I don't want to buy this high. I think this is probably a trading range. So I think buying above 29 is a mistake. You're buying too high in what's probably going to end up being a trading range. And you get disappointing follow through on 30. So any of the traders who bought above 29 were hoping to get a bar like 20 and a huge bull bar breaking up to a new high. And instead you get a disappointing bar where traders scalped at the new high on 30. So 31, bear bar closing near its low. Bulls who bought probably going to be quick to get out below this if they're not out somewhere, at the close of 30 or somewhere during 31. They'll be quick to exit, and that causes a big bar on 32. Could you sell 31? Maybe you could sell 31, but I don't think it's like super amazing. It is a double top, so 40% chance that you get, I don't know, maybe something like a measured move down, somewhere down here or down here, something like that. 40% chance of that, but I think it makes more sense to just wait. Big bear bar 32, but big tail on the bottom, probably buyers not too far below. What does this look like to you, 32? Does this look like the start of what's going to be a massive bear trend, or does it look like a vacuum test of the 19 close? I think it looks a lot more like a vacuum test of the 19 close. Additionally, look at all these bull closes. There's so many bull closes, and the bull closes early in the day were really strong, and we're still getting lots of bull closes here. They're not as strong, but the 5 consecutive, 3 consecutive. So selling, the reversals down are probably minor. It's really unlikely that we're just going to break into a big bear trend. So vacuum test 19 close finds buyers, reversal up 33. Do you buy above 33? You probably can, but you're hoping to get a breakout to the upside pretty quickly. The follow-through is probably going to be bad. And if you get bad follow-through, you probably got to get out pretty quickly. So you get 32, some follow-through for the bulls, but a doji bar. And then, 34, some follow-through for the bulls, but a doji bar. And then again on 35, more follow-through, but a big tail on the top. And it's really not what you want to see. We might get a micro channel up, but if you're a bull buying above 33, I think 1 bar of hesitation is okay, but you really wanted to see 35 kind of explode up and start to get a big reversal. It's a bit too early in the day for a midday reversal, so it's kind of in no man's land, and you're buying kind of in the middle of a trading range. But you are buying low in the overall trading range, relatively, still in the lower third, right at the lower third. So I think it's probably okay. But just when you see this, you see 36, it's a doji bar. You have two doji bars for follow through out of 3 bars. So really not excellent to be long here. And if you are long, you see a doji bar, you know that the buy the close is probably going to come to an end soon when you see dojis and you're at the top of the trading range. A lot of traders exit, causing 37 to close near its low. Can you sell 37? I think it's kind of like selling or buying 33. You're selling in the middle of a trading range, so it's not all that good. You know that we're probably going to get here, but you don't really know how. So you kind of have to expect bad follow through if you're selling 37, which you get bad follow through 38 and an inside bar 39. Some traders might exit above 39. At this point, this is a triangle. When you get a triangle, it's usually just better to wait for the breakout and see what happens. 50% chance the first breakout's going to fail. So 40 reversal down, but probably buyers not too far below, probably sellers not too far above. Bad follow through 41, 42 inside bar. Try to get a breakout to the downside on 43, but not all that good. And then a doji on 44. So this is technically a reversal bar, and some bears might take the sell below for a swing, but it's really not all that good. This is just a tight trading range, and it's better to stay out. II to 45, so 50% chance breakout failure in either direction. But if you buy above 45, you're buying right on the moving average, and you're buying, this is a tight trading range. You're buying smack in the middle of the tight trading range, so I don't really want to do that. Outside down 46, it's probably okay to sell 46. You're looking to get down here. This is the target. So if you're selling it, it's kind of a scalp. You're looking to get basically almost exactly 5 points. And, your 1-to-1 is around that high as well. So I'm not sure that the math is all that great to sell below 46. So that's why there's a big tail on 47. Traders waited for a deep pullback, and then they get sold, somewhere up here. And then, they're trying to make maybe, let's say they got in at the high tick. They're trying to make closer to 10 points, 7, 8 points, whatever. So that's why you get a big tail on 47, is because the math selling directly below 46 really isn't all that great, since the 1-to-1 is about where the target is. That's why you get kind of a doji follow through bar on 47. And then traders realize everyone agrees where we're going. You get a dump on 48 to the magnet. Traders see that and they buy back their shorts, and that causes 49. Do you buy above 49? You probably can. I mean, is this a trend? Is this a bear trend? Probably not. It's probably a trading range, so it's probably okay to buy above 49. I didn't, because the tail on top, but I thought it was fine to take the buy. Follow through on 50, but again, a big tail on top of 50. You got to be thinking here, we're probably going higher. We might get to the open of the day, which is actually exactly where we got to. On trading range days, you're going to oscillate around the open. You can see we kept projecting off the open of the day. But you got to be thinking we're probably going to get a little bit higher here. But by the time it becomes clear, you're probably going to be at the top. So, doji bar 51, you could argue that that's the pullback. For this was strong and deserved a second leg, so this probably needed to pull back. You could argue 51 was the pullback. And then you get 52. Bull bar, but a big tail on the top. Some traders buy the close, saying that it's probably always in long, and if they get a bear bar closing near its low, they can just exit. And then you get big follow through on 53. But now it looks clear, and you're towards the top of this range. So this might be more of a profit taking area around the open of the day. And I did actually take that trade. I thought in general, we were probably, it was probably okay to buy above 49, but I just wasn't confident enough in myself. And I knew if I bought above 49, I'd still be long during 52. And I knew that if 53 was a bear bar closing near its low, I'd just get out. So I bought the close of 52, and then we got a vacuum test of the open. So I took most of it off around the open of the day. And you get disappointing follow through 54, 55, still disappointing. And now you got to be thinking you're in the middle of a trading range day around the open of the day. So you probably want to be quick to get out. So a lot of traders would get out below 56. I ended up getting out. I would argue that this is a spike and this is the channel. So I got out below 54, thinking it was the bottom of the channel. Either way, you can get out below here, whatever. Just try not to get out way down here and give back all of your profit. So double top 56. Some traders sell below, but it's kind of risky. It's a trading range, so I suppose nothing is ever as bad as it looks or as good as it looks. Like these trades that look kind of bad end up being pretty good. These trades look kind of bad, end up being pretty good. These trades that look pretty good end up being kind of bad. So it's that kind of thing. 57, a bear bar closing near its low, but right on the moving average. A big follow through on 58, but this was pretty tight and probably going to get another leg up. So I think if you're selling 57 or 58, you're probably going to get bad follow through, which you do on 59. Can you buy above 59? It's a higher low. I think it's probably okay to buy above 59, but you know that you're probably going to have to sit through a pullback because 56, 57, 58 was so strong. So you can't be expecting just a vacuum test straight up here. We're probably going to have to go sideways. Follow through for the bulls on 60, but a lot of bulls end up scalping out, and then you get 61. I don't know if they got 2-to-1 of their true risk. And you could argue traders got about 2-to-1 of their true risk, and they scalped out, causing 61, trade below 60. Second leg up 62 to around here, and then reversal bar down on 63. Low too short. Bears want a breakout pullback. Bulls want a breakout above and a measure move up. Kind of the problem with buying above 59 is that, your risk reward isn't all that great, right? You might be able to buy, but your 2-to-1 of your initial risk is way up here, which is exactly where we went to. But you know that there's probably going to be sellers here because this was a bad sell signal bar and it ended up working. So you have trap bulls here. So if we get back to this price, you have to expect sellers, which we did find some, but we ended up breaking out to the upside. But it's hard to sit through like this and this if you're a bull, and you really don't end up making that much. So you don't stand to gain that much, and it's hard to sit through the pullbacks. So really not worth buying most of this stuff. Inside bar 65, probably sellers above, buyers below. This is a tight trading range, and then you can see bears were trying to form some kind of wedge, but you get a reversal bar up 68, breaking out above the wedge. Bulls want the measure move up, at least to here. More aggressive somewhere up here, but it's a trading range day, so aggression is not going to make you much money. Disappointing follow through 69, big tail on top, doji 70, but still a bull close. Traded below 70, but still a bull close 71, and then a climactic bar on 72. 72 breaking out above everything, but this was a bull channel, and we just got to break out above a bull channel, so probably not going that far. Probably exit below 73 if you're long. There's not much to gain. You're in the middle of a trading range on a trading range day, and you're right at the open of the day, so it's not that good. We got to sell off here, but I would just let all this go. Technically, probably sell to close 74, but I would just let it go. For stop orders, it was a difficult day, but I thought, you could probably sell 7 if you're, but you have to sit through this. You can't sell this and exit there. You can probably sell 10, 15. These are technically sell the close bars, but low in the channel, so not all that great. Maybe 33 is okay, but you got to find a way to get out quickly here. You can't buy above 33 and get stopped out. You have to find a way to get out somewhere in here. It's 37. I don't think 37 is all that great. I did take 37 and I exited above 39, but I don't think that was as one of my best trades of the day. Outside down 46, probably an okay swing sell, but kind of difficult because there's going to be buyers here. Probably okay to buy above 49, but hard to do. Probably 59, but again, hard to sit through this. And that's pretty much it. On the daily chart, if you bought, you're getting disappointing follow through, which isn't surprising. This is a bull trend, but we've got the spike and now we're entering the channel phase. I do think it's very possible that the bears who sold above this high are going to make money. So pay a lot of attention to this price point if we're able to get back down to it. This reversal is probably minor at best, 2 legs sideways to down, and then probably more up because this is so strong. But this is also climactic. So again, I do think the bears who sold above this high have a pretty good chance of making money. The weekly chart, good follow through for the bulls, but again, you can see this is entering a channel phase and, probably done with this big spike. Maybe we end up getting a measure move up at some point, but we'll see how it ends up going, somewhere up to 5,500. And yeah,